Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over some pattern recognition. We'll talk about some patterns that I see in the markets. We'll compare them to some patterns that we see today. Remember, Elliott wave and these patterns, they happen on different time frames. Some time frames are very long, like a continuous ongoing big bull market. And then you'll see this pattern repeat over and over and over. So what I'm going to do is I'll show you the last bull market, that entire pattern, and compare it to some other patterns that we see in the markets. And you guys can determine, what's going to happen, and I'll give you my financial opinion as we go along. All of the data that I look at is still positive for a commodity bull market to happen. The PPI to CPI ratio, inflation, when you look at the 10-year yield, the 10-year yield isn't just diving like everyone's running to bonds. So I know a lot of people get afraid. They see their account values go down or up or whatever. And oil's been pulling back here. But all of the drivers are still in place at this time. The housing starts are still high. We're seeing some positive earnings releases from some of the new home builders. So everything's still intact at this time. And right now, we're just going to play with some charts. I'll show you some cool looking charts here and do some patterns. So this is TradingView. What I'm doing is I'm going to bars pattern. That's this guy here. On here, it's called bars pattern on the left-hand side. I click that. I click where I want to start it. I click where I want to end it. So this is an entire pattern here. I'm going to copy it, Control-C. This pattern here is the bull market for SM Energy. And SM Energy has a really clean pattern here. That's what I'm looking for. I'm going to compare that on a different time frame to Obsidian Energy, just for the heck of it. I'm going to zoom in. Well, actually, I'm going to go back out. I'm going to paste it in here. I'm going to shrink it way down. I'm going to put it on the right-hand side over here. And we'll do some comparisons here. So this is the yearly. I'm going to back out some. Actually, let's go to the little bit bigger than that. And I'm going to just overlay this chart on the current move. I need to shrink this down first, though. Then I'm going to expand it up a little bit. So hit auto here. All right, so I think where we're at today is this pattern is playing out like this. And we've got our lead in here. We've got the movement all in here. It's basically the same lead in. And we've got the lead in. We come on up. We come back down. And this one here had the 2008 financial crisis in it. So we've come on back. This one's come on back less. And then we've come on up over the time frame. So if we were to compare this pattern over each other, something like a $22 price could happen in what I consider to be kind of the first wave here. There could be other waves behind it, but if it were to match the last bull market and the sequencing of it, I think that we could get up to $20 or so in this bull market if it is roughly the same. And it's going through the same type of cycle. This cycle isn't done yet. I still think we've got a couple more highs here, especially this one here. Sometimes this one doesn't go as high. Sometimes it comes in here. But I still think there's more upside left when looking at these patterns. So OBE does have that pattern as SM Energy on a totally different time frame or scale. Remember, these patterns repeat over and over. If we were to look at LEU, just another company that also exhibits this pattern. So if I were to zoom out, I'm going to paste it on there, shrink it way up, and then I'm going to overlay it as best I can. And basically, what you're going to see here is this guy here is this pattern there. We've got two run up. This sideways motion is this sideways motion there. We came down, we came on back, and now I think we're going to run into these, this big portion on the right-hand side still. So I think that we're like there, if we were to align the bottom of this up. And the size of this doesn't correlate to the size necessarily. The fractal is going to correlate to that. And if you were to look at the fractal of it, trend-based fib extension, and you were to say that this is one big move here, you could go way higher on a fractal basis if we were to get 3.618 up to $330 or something like that. Is possible. Doesn't mean it will happen. But we see these fractals, and I used SM Energy's its pattern and compared it to Centrus Energy, which is a uranium enrichment company. I also used SM Energy's pattern and compared it to Obsidian, which is another oil and natural gas company, and used it on different time frames. So these patterns exist. They are very much similar. I'll pick on UEC for another one, and I don't think these fractals are necessarily done yet. Let me shrink this guy way up. So this is the big fractal here. And let's see if UEC has a similar fractal or not. So, and this one's on a, let me do a daily here, and then scroll out here. So I think and if we were to stretch this thing out, so what I think is happening here is that this is actually stretched way on out like this. So I think what's happening, if I were to stretch this fractal out a little bit more, is the fractal down here. If I can align it all together here, and let's zoom in on that section there. The fractal here is actually, this lead-in is here. We come up, down. This guy here is an accentuated one. We've got another one, and then we can follow this fractal higher here. So I think this is way at the beginning of the move, and that what to come based off of ratios, based off all these things, that this little accumulation zone is actually the beginning of this move here, before I think a gigantic move higher is yet to come. This doesn't mean that we are necessarily going to go this high. It depends on the size of the fractals, but it does look pretty similar. If I were to blow it up, the size of these fractals are pretty close. So this three-leg move here, I think, is this move into here. And quite possibly, we could see a very large move ahead of us. It does depend how you stretch this stuff out. It's not exact. I'm just playing with things. But this is the type of things that I look for in some of this. It doesn't mean that this is necessarily going to be right. Could this be the fractal like this, where we have the two humps, it's all compressed and it's there? It's possible. I just don't think so. I think it's more on the lines of this fractal there. You can see the motions all through here are roughly the same. How this moves is that move. So, and I've seen this with other charts as well, with a whole bunch of different companies. And I've seen it across oil, uranium, natural gas. I've seen it across a whole bunch. I don't know if I see it as much in any of the precious metals sectors. We're probably still very early in it. We can try one here. Let's just take EXK and see if we can see anything here. Let's go all the way out. Let me see if I can shrink this up some. And what I think is happening here is this is going to be stretched like massively to the right-hand side here. So I think that this is a big stretching of this here. And let me see if I can get it to come in there. Now I'm gonna zoom in on this section here. So I think that the lead in here is this guy, and there's our movements there. And we've come on back here and it'll catch on up, but I think this is overlaid in the fractal, or the pattern itself is very similar. And what I think might potentially come is a very big move to the upside, over time. So I think that this is a lead-in to a much bigger move later on in a big picture type view of this. This is the pattern that's coiling up, and this is the lead-in to a big move. So if that is the case, and we see all of the supporting data with all of the PPI to CPI, let's pull that up. What that means is a large bull market is coming. And I'm looking at this from a larger, bigger picture view than just diving in the short-term movements. That's why I'm not buying and selling anything. I'm just holding on to these shares, guys. I'm accumulating for what I think is a gigantic bull market that's coming. And the reason I think it's a gigantic bull market that's coming is because we've just broken the CRB to S&P 500. Yeah, this is falling lower here in the short term. So I do think that we could see some weakness in commodities in the short term, and that this is a first wave, and then we'll pull on back, and then we'll do a big old third wave. But I don't try timing my buys. I just hold on to this stuff. The new paradigm where commodities will outperform, the trend line's broken. I have good entry points all through here. I've added along the way. Why would I try timing it on the very short term, which has the least probability of success? I'm taking the largest probability of success, which is basically just accumulate as low as you can. If we get a pullback down here, accumulate that too. I don't understand why people are trying to time the short term to try to. Most people that try to trade in the short term are not successful in doing it. The higher probability is the long-term bet, and the paradigm has already shifted. So when I look at this, if you can just sit tight in these companies, I don't see, this paradigm is shifting right now. This is the PPI to CPI ratio. The paradigm here, if I were to take a length of it, the date range. So this is a change from here to about here. That was 3,804 days. And if I were to copy that and kind of paste it, basically that same shift occurred here, and it was right here. That's 3,408 days. And if I were to take that and project forward where that ends up, this is the bull market of the 2000s. We would be at the 2029 if it were to repeat that. If we repeated the 1970s bull market and we started that, which was a little bit longer, we are at 2030, October of 2030. Those are the two bull markets overlaid using the PPI to CPI ratio. And if you notice, they didn't go just straight higher. 98, we got the buy signal, 98, 99 for the commodity bull market. We came on up, we pulled on back, and then we shot higher here. This was the recession in 2001 where we pulled on back. This this setup, even if we to pull back down here, I don't know why anyone would necessarily sell. You just get another good buying opportunity, which I think will be an excellent buying opportunity if it pulls back. And I think it might pull back some because your CPI is going to go up and your PPI is going to lag at some point. And I think it'll pull back a little bit. Then we're going to run higher again. So I think that it will be similar to this type of move here. And it will take us to 2029 or 2030 is the two projected time frames using the 1970s and the 2000s. And in between this was the demographic that was coming down in an era where the demographic was declining and low inflation, low interest rates. And this was a demographic that came into home buying years. Same with this one that's coming into home buying years. So the change or the paradigm shift using this metric is telling us that we should stay long. And that this will probably go slightly lower to sideways, I think very similar to what this looks like here, where the CPI catches up to the PPI. And our CRB to S&P 500, that is still positive. Everything's still positive with that respect. The home prices are positive in terms of the home builders ETF. We've broken out of this pattern. Now we're heading back higher. That also has the pattern. So if I were to go back to SM Energy and copy that pattern real quick, there's my pattern, copy it, go to XHB. I'll show you the pattern here. Control V. Let's shrink it down a little bit. Bring it on over. So the pattern and this is just, patterns repeating here. I think the pattern is like this for the most part. It's somewhere in that range, or maybe I can stretch it out a little bit more. This pattern could be something on the lines of this, potentially. Let me make it much, much larger. Something on the lines of that is possible. Something like that. And then we go higher here, create this big pattern. Now, this here is also aligned with some of the uranium stocks and stuff like that. It could be this. Now, I could scrunch this up and try to make it fit a little bit better. Let's see if we can get this to fit if I were to make it like this. So if it were like this, and I scrunch it up some, that can also fit within it as well. This could be something on the lines of that. Something on the lines of that as well, where this market ends at 2026. Or something on the lines of that type, 2025, 2026. So depends how you stretch this out and squeeze it on up. I'm just playing with charts here. Doesn't mean I'm right or wrong. But overall, I do think that the commodity bull market's still ahead of us. All of the data says so. So I did see some comments. People were kind of getting worried. Oh, should I sell oil? Guys, they're releasing strategic petroleum reserves. It is pulling back. They want it to go lower in the short term. I'm not going to sell. I got good entry points. I'm going to continue to buy on pullbacks. That's the strategy. And I'm going to ride through it. So that's what I've got there. I think uranium's looking good. Precious metals are looking a lot better. Things are turning around. But that's all I've got, guys. I was just playing with some charts there. If you guys like the content, give me a thumbs up. Subscribe to the channel. And subscribe to the website, the Platinum membership. We've got a question and answer session tomorrow, Saturday, at 7 a.m. Mountain Standard Time. I'm going to tape it. If you guys miss it, I'll post it to the website and you guys can see it there. All right, guys, we'll catch you later. This is Finding Value.